The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We are going to have as our guest today Tim Bost, Financial Cycles Weekly, one of the guys that's up in that Timer Digest rankings all the time. He's always in the top 10. And if you'll remember, a couple of weeks ago, he said all hell was going to break loose around this time. And by golly, I think he hit it right. So we're going to be able to listen to him at 9:30. Now, we posted the charts for the DAX like we usually do. You can see the cyclical patterns that are there. Also, we posted the FTSE, and it's making an absolute perfect Gartley at that time. And with that, that's the big purple one, folks. Let me bring it up again so you see it, because I wanted to expand on this a little bit because it's a very important concept. You'll notice that we have everything set up. This is a daily chart. So it's everything is set for the thing to go up. The key to this, folks, is the timing correct? And that we never know. Let me show you a perfect trade in wheat. Let me just give this to you 1 second here. And I wanted to bring this to your attention to show you why it's important. This is nothing. It's exactly like the FTSE chart, only upside down. This is a bullish Gartley. The other one was a bearish Gartley. This is March wheat. It's a 15-minute chart, but I want to show you a principle that is very, very helpful when you're trading either short-term or long-term. Now, if you look at this chart at point D, you see where it completes down there at 645 per bushel. Okay, now, as you see now, we're trading at 646 per bushel about an hour later, okay? Now, these patterns, they are predictable within limits, but they also help you to control risk. And the thing that you want to do is you want to put a time stop in. Let me just show you what happened. This is how I usually handle this, because when you're doing a 15-minute chart, you have a lot of things going for you because you know exactly where the support and resistance is. And you see, once you stay there for almost 3 hours going nowhere, folks, that's either major accumulation or distribution. And all you have to do is put your stop below that recent low. You only have to risk 2 cents to be a farmer, $100. And that's what we call market feedback. These patterns work so quickly. Usually they work within, just about 20 or 30 minutes, but not 2.5 hours on a 15-minute chart. That told you that there was something wrong. So that's where you can tighten up your stops and, watch it very, very closely. Anyway, that's a market feedback thing that we use, to keep your losses small, because these patterns, when they work very, very well and very, very quickly. Now, we were talking about a couple things yesterday. I wanted to bring them to your attention because they're moving now in the direction that we thought. The first one, of course, was the dollar index. I'll get to Tesla in a minute, boys and girls. Keep your radio tuned. Anyway, you'll see the big ABCD. This is a daily for the whole month of December, bottoming here on January the 4th, and we've had a pretty good run now. It's a pretty big up move. We should get a rally up to about 90.45. That would equal the 61% retracement of the CD move in the dollar index. Is this a major bottom in the dollar index? I don't know. All I know is that it's a tradable bottom, and that's all I know for sure, that in fact it is a tradable bottom and has already worked relatively well. So those are ones that I'm watching. Now here's another one that is not it's not for the faint of heart, but if you'll remember, we were talking about the Tesla, and we want to get this up here because the price target that we were looking at on Tesla was 765. We hit 771 yesterday. We're already gapped up above 777 today. So we're above the 1.618 retracement here. So this thing could extend a whole lot farther. I think there's a lot of resistance up in here just because of that 1.618 number, and there is a lot of news out on it. I think the most amazing one was the company that had been very bearish on this for some time came out and threw in the towel yesterday and said, well, we've got this one wrong. I wonder when they figured that one out. Okay, well, we'll see what's happened. I shouldn't make fun. I'm not making fun of anybody. I'm just saying that the way they say it is a little different. It's different because of the hold on, is a little different than the way I look at things. Because when I see some of these things unfold, I say, gee, you don't have to risk very much if you're here. Now let's get to the gold market here. This is one we're really following closely, folks. Here is the gold chart that we were watching yesterday. We'll get this. Oh no, did I lose this thing? Yeah, I have lost the connection to the TFNN. That is the problem. So I'm going to have to talk here for a minute until I get this Tiger Den back in business, and then I'll be able to talk it. But you'll be able to see here when we come up, we're looking at a potential here of 1890 as a potential buying spot here in the gold. I'm very bullish the gold, and I know there's nothing as bearish as a sold-out bull, but by golly, I still think we got a shot at this to go a whole lot higher. If we can get Bitcoin at 38,000 today, I think we could get gold to at least above 2,000 again without very much trouble at all. But that's neither here nor there, folks. When John writes the letter for me like he did this past week talking about cryptocurrencies, he's extremely good at that. He's been involved with it for many years. He understands them better than anybody that I know. Even he says, yes, I guess it could be a bubble, and it could stop at any time. But, these things are going up, and if you're playing the game of speculation, you have to say, okay, this is what I'm going to have to risk to see if I'm wrong. And that's what he tries to do, and he does it relatively very well, as a matter of fact. Okay, I think I should be back into the room again here. 10-4, copy that. And there we go. Shut the front door and raise the rent. All right, now here is the gold that we're looking at. You'll see here that we have this 382 retracement. That would be down just about $100 and some dollars. Yeah, just about exactly $100. That would be pretty good compared to the one we had back in early December. So I would be watching this one potentially for a buy here at 1890. But boys, it's not going to be easy, boys and girls, because if these things are going to be crazy, so you're going to have to risk about $10 to $12, I believe, in the gold if you're going to get to that point. But we're not there yet. I would like to see very interesting. Now, you'll notice here what's happened yesterday. We got down to 1902. I sent a video out last night, those of you that belong to 24/7, and we had a beautiful 382 retracement there at 1927. It had a high of 1928. And we got down to 1914, which was a $1,400 profit. And now if you're in that, you would keep your stop at your break-even level and let her rip to see if it's going to get any lower, because that would get us down to that 1890 level, and that would make it something to be really admired if it can get there. Ideally, folks, it would take 5 or 6 days to get to 1890. Then you can just lick your chops and get ready to buy some gold. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the soybean oil. We've been in a really roaring weather market here for the last 6 or 7 weeks, and it appears to be not getting any easier. But I also wanted to put up the chart here for the March soybeans because this thing has had a rocket ship move, which is run by the chief rocket ship advisor, Mr. Z here. He's been long all the way, and God bless him. But you can see here we're having a pretty good move here in these. But these weather markets, when they turn very, very quickly and sometimes without notice. So tomorrow we're going to have Rich Anderson as our guest, going to be talking to us about the weather, these weather markets, and some of the things that are involved with looking at these things to look at, see how we're going to look at. Yes, I noticed the post down here on coffee. The coffee didn't hold that 124 level that was so very important. So it's probably going to get down to the 119 level is my guess, is what we'll be looking at in the coffee market. So that's my 2 cents worth. By the way, if you want to call in, it's 877-927-6648. And we'll be happy to answer any questions if we possibly can. Now, I wanted to bring in one other comment about the gold. And what I'm watching here in the gold is very important. I talked to you about when I use a time stop on something, but here is a chart of the GDX, which is the gold miners index. Now you notice that we had a big move down, $60 move down in gold yesterday, yet the GDX could not take out the lows of last Friday. That's a very, very positive thing. And so Monday. And so that's a very, very positive thing in my opinion. And if we get this thing above, 39.50, this is going to be a breakout. And not only that, it's going to be a valid trend line breakout, because if you look at this dark line that's here from the top to where we are right now, that dark black line, that's a valid trend line. And the reason why it's valid is it's drawn by connecting the 61% retracement. In this case, it's 0.59, which is close enough, and the other one is 0.67, but they're pretty much spot on. So if you get above that line, that is usually a bullish sign. Not always, of course, there's no 100%, but that's a sign that you could be, getting ready to go up. Now, remember, we're having a really nice correction in this gold market. We're in a 5-month correction, and we're about ready to turn up, in my opinion. Hold on, I think we have a Robert from Kansas City, Missouri, is on the air. Robert, how are you today?
Well, good morning, Larry. Please finish your thoughts on gold. I don't want to interrupt your good commentary.
My thoughts on gold are they're pretty much over. I just think that if we can, I think it's ready to break out anytime. In fact, I had a really hard time to say today to buy above 1926, but I decided to wait another day or two, only because of that GDX didn't break out. But I'm watching it very, very closely. But if we get gold above 1926 today, I think that's going to be a sign that we're probably made a bottom down there at 1902 yesterday, even though I'd rather see it get to 1890. So those are my thoughts. What can I help you with the UNG, my friend?
Yes. So on natural gas, I heard you said maybe a couple of days ago, I believe I heard you said that you were bullish on natural gas, and I wanted to ask you just kind of why you're bullish. And the reason I ask is, like if I'm looking at the chart for natural gas on a 5-hour chart, it has just been trending down since November 1st. Are you bullish because you're using, I think you call it the 20-man line, where you kind of put the line on the top of November 1st?
Yeah, well, it's definitely in a downtrend from November. We had a beautiful 3 drive to a top there in November, and we came down. We hit the 61% retracement. We had a strong rally. Then we had that big gap down last Monday, which was it dropped all the way down to 230, and then since that time we back to 271. So. 272. So this is telling you that I think we got a chance for it to go higher. That's really what I'm looking at.
Well, just when I look at it,
I wouldn't buy it here.
Chart. What's that?
I wouldn't buy it here because you're in a 5-day run, and I don't buy strength very well. So I'd rather buy it at around the 255 level is what I'd rather be buying it at.
Well, thank you that you jumped to my question. I was saying I'm looking at a 5-hour chart, and it looks a little toppy.
Oh, sure.
And so you would wait for basically November. You would take December 28th to kind of the high we are now, and you would do a 382 retracement, which I guess you've already done the math, and you said it's 255, and that would be a good entry point.
Yes, that would be good. And at that point, you've got a nice retracement that you're buying into. It's a bull market for sure. We're making higher bottoms ever since July. We made one in July, one in September, and another one here in December. So we're certainly in an uptrend, and it's shown itself being up now about 6 days in a row, I believe. So I think buying a 382 retracement might not be a bad idea. You'd like to see it with an ABCD format too, Robert, because if you got the ABCD into that 382, boy, that gives you a lot more confidence. Like with this gold, you just got a straight down move from 1962 to 1902 with nothing in between. I mean, it was just a falling knife, and all of a sudden, it stops at 1902, which was no number there. I mean, there's not a 382 or anything there, so there's no way you can pick a bottom on that.
Yeah, well, I thought it was interesting. Even though gold fell, GDX didn't back down that much.
It certainly didn't. It couldn't even take out the lows of Monday, which was really surprising to me.
Do you have time for one other question on?
Let me check the time clock here. Yes, sir. You go right ahead. Fire away, Robert.
Crude oil. So on crude oil, you were thinking that, hey, we have a 1-3-5 pattern. I guess it's a better pattern on heating oil than it is crude, but pick one or the other. With are we at a point where crude, I'm looking at it, it's 50, 70. Couldn't it go all the way up to 52, and would that pattern still be valid? Or is that not correct?
No, at 52, it's not a valid pattern, because if we get up to 51.40, that's the maximum risk exposure. So if you sold it at 50.40, you have to put a $1,000 stop on it. But we did the heating oil. That's actually working a little better. It's still in a slight profit because it's a slightly weaker than the crude oil. But this is a big pattern on the weekly. It might fail. In fact, we've been up here. I think this is the third time this week. Here we are on Thursday, and we've been up here 3 days of the week into that 151 area, 51 area, and at 154 level in the in the heating oil. So it's trying to make a top, but it can. I think they have oil numbers today. That could be enough to just take it up and go higher. But it's a good pattern on the weekly. I have to give it a little bit of time because it's such a big pattern that you have to really, let it breathe a little bit, as they might say in a trade.
Right. So on crude, are you saying 50.50 or 51.50?
51.50 in the crude. We get above that, something's seriously wrong.
Got it.
Oh, it won't be seriously wrong. I'll be gone. 60. Yes. Oh, yeah. Or 70 or 80. Who knows? Hey, thanks for joining us, my friend, and Happy New Year to you. Thanks for calling in. Yeah. Stay tuned for Tim Boss.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we have Tim Bost of Financial Cycles Weekly on the air, I believe.
Good morning, sir. How are you today?
Do you know why you're on the show today?
Well, I recall we got together about 3 weeks ago, and I mentioned today, and you said, let's do this.
Yes, you did.
So here
you said the proverbial caca was going to hit the fan, and by golly, I guess we could definitely say that something for the history books, unfortunately. But boy, that was is this the start of it, the end of it, or what's happening?
Well,
can you give us a rough idea?
It was very, very interesting because a week ago, actually, it was on New Year's Eve. I did a session with some of our subscribers and talking about what was coming up this week in more detail, and we took a look at the chart for the congressional certification of the Electoral College results, which was scheduled yesterday for 1 p.m. And in examining that, we found some very, very powerful midpoint activations. Primarily, the Zeus Volcanus was activated by Mercury, which was at exactly on the midheaven at the time that was scheduled to take place. So obviously this was a communication related to Mercury and some voting and decision-making associated with that. We expected all that to take place. But lo and behold, that Mercury triggered the midpoint of Zeus and Volcanus, two of our trans-Neptunian friends, so the so-called hypothetical planets. But this is all about huge efforts taking place, and the signature for this is the beginning of a great war. So that's literally what happened yesterday with the storming of the Capitol building in D.C. We also had Mars-Pluto activated, which is a little bit ominous in terms of the conventional planets. And that's all about actions in which things break apart. And I commented at the time that this was actually anticipated because if there were objections raised to the vote, then what would happen was the joint session of Congress would break apart, and they would have separate sessions in the Senate and the House to do their individual voting. So that was not, that unusual, given the fact there were going to be objections to the certification. But then the one that really caught my attention was a couple of other trans-Neptunians that got activated at the midpoint of Hades and Poseidon, which is all about mental deficiency, mental defects, and having to deal with people who are incapable of reason. And my anticipation for that was it was going to be all in the debate chambers, but we had unreasonable people on all sides, and got to see the rather disturbing results of that yesterday.
Wow, it was really amazing. I didn't see it till at the end of the day. I didn't know what was going on, but it was. I could only watch a little bit of it. It made me ill. Tim, what do you think the market seems to shake this off, so evidently there's a bigger cycle out here pulling the stocks up. Any feeling for what you're looking for in the market in the next, say for the month of January? January has usually a positive bias where the short the Russell outperforms the rest of them, and it's certainly done that all during December. So.
Right. Well, it's interesting because yesterday we did have a pretty significant up day in the markets. In fact, 80% of the stocks in the S&P had price increases for the day. But what caught my attention was that all of the I don't know whether you call them the super large cap or mega cap stocks declined. We had a sell-off in Apple and in Amazon and in Facebook and Microsoft and Alphabet. All of those lost ground yesterday. So I think we've got a major shift coming up right about now.
Well, right about now is today, so we'll see. Right. We'll see what happens.
Yeah, and I've got a chart here, and I've done my cycle forecast for the markets here, and we're looking at that number A there is today, in fact, and what we have going on today is a Jupiter square to the trans-Neptunian Apollon, and both of these tend to be very, very positive dynamics for the markets. But when we get these positive dynamics, oftentimes we hit a trading high. So that's what I'm looking for here is some declining energy here into about the 10th of February. That's when we're looking for a short-term bottom, or really a significant support level there, occasioned by the retrograde station of Poseidon at that point. And then from there, we kind of move upward with a lot of inflection points along the way to a peak that I'm anticipating coming in around the first week in May, about the 7th, 8th of May there, where we've got a Mars-Hades conjunction that I think will signal another top and a fairly sharp decline into the solar eclipse that we have coming up in early June. So just based on the broad perspective of the astrological projections and looking at how some of these cycles combine, this is kind of the model that I'm working with here. So we are looking for some selling pressure coming up in the coming weeks here into early February, about the 10th of February. I'm looking for a significant low there.
Okay, we have a question from one of our listeners, and is your definition of a selling pressure a closing day, closing on the downside? I think he's being facetious. What's your definition of a correction? I guess it's a down close.
Yeah, that would be generally what we're looking for there. We get sloppy with our terminology sometimes, and sometimes that's deliberate to kind of hedge our bets a little bit. But when we're looking for a down close, it's not necessarily confirmation of a trading bottom. We like to be able to try to pinpoint those if we can, but we're always trying to evaluate what the current trend is and what the market is telling us. We try to trade what you see, as a famous guy once said, and so that's what we're after. Right?
Infamous was the word, Tim. Infamous.
Okay.
Tim, I know you've been very, very bullish Bitcoin, and we've had a little bit of an up move here in Bitcoin since the last we talked 3 weeks ago when it was trading at around 20,000, and I see it hit 38,000 and change today. Shut the front door and raise the rent. Do you have upside targets on this thing?
I do indeed. Let's see if I can back up my slides here. Oops.
Do I have to sit down to listen to this, or will it just shock me enough?
Well, it'll just blow you away. Okay, here we go. Let's see if we can bring this up to a little larger size with my format here. Bear with me 1 second. I hit view and go back to this. There we go. So the last time we talked was on the 17th of December. And that was the day after that Bitcoin had finally broken through resistance at 20,000. It had previously traded at 19,000 and change, and the high was in December of 2017. And that was a very significant day, and it was something that Bitcoin aficionados had been looking for. And so we projected that then on that basis, and we had seen that breakout. We were looking for resistance at that point at 23,700. And I noted that if we saw a move upward at that point proportional to what we saw in the fall of 2017, then our price target would be 101,000.
You say what?
101,000.
Wow, so, how's the Kool-Aid down there in Sarasota?
It's delicious.
Hey, stay with us. Tim Bost of Sarasota and Bradenton, Florida. We'll be right back. Financial Cycles Weekly, folks.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, we're back talking with Tim Boss, Financial Cycles Weekly. Tim, you have an Astro Cycle forecast there, your Standard & Poor's 500 index. Is that a derivation of the Bradley model?
No, it's not. We combine a number of factors with that forecast, and essentially what we're doing is cycle analysis and then looking for the inflection points in the cycles in a composite fashion, and then searching for astrological correlations with that that we can identify as potentially moving the market at those particular times. So the cycle inflection points will give us kind of a 3 or 4 day period in which we can anticipate a shift in market dynamics, and then we go in and look for the dominant astrological factors that are there, and then back test those to see if they confirm the cycle work, and that's how we come up with this. So it's not a Bradley model per se.
We have a question from one of our listeners about the things that you're using that usually classical astrologers, as Hades and some of the other, these are asteroids that are out there that...
Well, what we're using are what's known as the trans-Neptunian planets. These were developed as a hypothesis by a German astrologer, Alfred Witte, back during World War I. And so his work was spread and began to take on a little bit of attention in the first half of the 20th century. And so it was interesting because nobody had figured out that there was anything there where he was postulating these orbits of extreme outer planets. But then about 15 years ago, we discovered the Kuiper Belt, which is a whole bunch of little rocks way outside the orbit of Pluto. In fact, Pluto is kind of at the edge of the Kuiper Belt. And we have now determined that what Witte was hypothesizing are actual planetary bodies. And certain astrologers try to track the current designations of those. And I just prefer to use Witte's terminology there. So when we talk about Cupido and Hades and Zeus and Vulcanus and Kronos and Apollon and so forth. These are a reference to the 8 at the time, hypothetical planets that Witte postulated that are now confirmed as Kuiper Belt objects.
Well, there's some pretty smart dudes out there. These guys are pretty advanced mathematicians, aren't they, in order to do the calculations and stuff for these planetary things, like when they send a man to the moon and stuff.
Well, and the interesting thing, Witte was doing his work about 1915 or so in that time frame, and of course there were no computers, and he was stuck in the trenches in World War I, and this is kind of a hobby. He was trying to calculate these planetary orbits. He was a surveyor by trade, and in fact he designed the layout for the Hamburg airport in Germany. They had aviation for about 3 years at the time, and his design developed an airport that was able to land jets. 5 decades later. So it was quite interesting. His mathematical skill was quite extraordinary.
Yeah, there's some pretty sharp dudes out there. We have a question from one of our listeners about the gold market. What do you think is happening in gold, Tim?
I remain fundamentally bullish with gold, and we are on a buy signal there that had in place a relatively short time. There have been some fake outs there along the way, but we've been on a buy signal for gold since the 18th of December, and it looks like that we're holding there pretty strongly at this point. So we remain bullish for gold.
Do you have any upside targets for gold? That was the second question.
Not specifically at this point. What I do is track the bullion, and then I also follow the S&P ETF. GLD is the trading symbol there. And what I prefer to do is put in stop levels rather than put upside targets. So right now I've got a stop in there at 170.72 for that ETF on gold. So you can translate that to the basic price as well.
Does that GLD, does that trade off hours too, like we do in the futures? Does it trade 24 hours a day?
I don't believe it does. I think it's an end of day kind of proposition there.
Oh, okay. All right.
Because it's traded on the stock exchange.
Okay, now let's pick a date in the future. What's your next big, stuff hits the fan date? Maybe in February. You said February 10th. Is that what it was?
We got a lot of hit the fan dates coming up here. We still got to get past the inauguration, and there's a good bit of action going on here during the month of January. In terms of the market action, however, we are looking around the 10th of February as a significant turning point there. So maybe we want to talk between now and then and reassess things.
Absolutely, and we'll definitely have you on. On the 10th, but we'll have you towards the end of January, maybe around the inauguration.
I'll put the 10th on my calendar, and then we'll communicate, set up another time in between.
Yeah, why don't we let's just do it in 2 weeks, Tim, right after the day after the inauguration. How's that? Because these things have been your dates have been really spot on, and it shows a little bit. Now, this is the important question. From Tucson, Arizona, we have a caller, a chubby little fellow that has been around for a long time, and he wants to know if there's anything important happening tomorrow besides the fact that it happens to be the King's birthday. Elvis Aaron Presley. Anything else other than that on January the
8th? In terms of tomorrow, we are anticipating a bit of a down day in the markets in general. From an astrological perspective, I'm not seeing a specific trigger that jumps out here, but we definitely want to pay attention to this action here, especially with what we've been seeing here with the sell-off in the large caps, the mega stocks, so to speak. That could accelerate a move to the downside. For me, though, I'm going to take the thank God it's Friday position.
I think everybody.
This has been a week to get through, man.
Shut the front door for sure.
I'll be glad to see things shut down for a couple of days there.
About 5 years ago, on January the 8th, Sarah and I were sitting here, and we heard this rat-tat-tat, and it was they had this big gunfight at the Safeway store about 2 miles away from us.
Oh, Lord.
And that's where the representative was shot. And she's the wife of the senator from Kelly from the New State of Arizona. And I think he killed 9 people. He's up in prison up there in Florence, California now, but very, very sad day, of course. But gosh, it was just like it was you're sitting in Bosnia or something when you heard that stuff go off. It was real.
I didn't realize you were that close to that event.
Yeah, we're protected here because we have Claymore mines, and I've got Lars rockets on the roof. So Hey, listen, buddy,
you got that dedicated satellite with the killer drones, right?
Oh, yeah. It's like I got drones all over the neighborhood. Listen, thanks for joining us, buddy, and we'll have you on definitely on the 21st of January and again on February the 10th, okay?
I've got them on my calendar. Looking forward to it, Larry. Have a great week. Bye-bye.
Tim Boss, Financial Cycles Weekly. Folks. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted the chart of Apple, the most actively traded and widely held stock in the world. We've been in a 7-day down move in Apple, folks. Starting on the 30th, we went down to the 78% level at 126 and change. As you can see, we took out the low of the 4th by just about a quarter of a penny. Not a quarter of a penny, quarter of a dollar. And now we're rallying back up. We should get up to about that 131, 132 over the next day or two. That's a 382 retracement. We've already hit that 382 retracement once. So on a short-term basis, this is certainly in a downtrend, but we should get a bounce here. And we've had a big bounce in the NASDAQ already this morning from being down. It's rallied up to be up quite a bit. So that whether Apple will continue along with that, I'm not sure. But there should be strong resistance at 132 in the Apple. The reason why I follow that is because it being the widely held stock, that it really is a big indicator sometimes of when the market will change trend. This doesn't happen to be one of those times because we've been going straight up since the 29th of December when Apple topped, when we made that 1.618 expansion. So that was a new high, by the way. We haven't dropped very much. We dropped, $11? Shut the front door. That's nothing in Apple. That's really not very much at all. Tomorrow we're going to have Rich Anderson on the horn early at 9:30 to talk about the weather markets that we're having in the corn and beans. And, of course, wheat is not being affected too much. It's been selling off a bit, but we've got some great opportunities coming up in some of these markets, folks, as you can see by this volatility. I mean, look at the news we had yesterday, folks. In any other circumstances, the Dow would have been down 1,000 points as a minimum, in my guess. But what did it do? It didn't even go down. It went from up 600 to up 400. I mean, give me a break. I mean, there's a bigger cycle out there, folks. That's got to be what it is. I really believe these cycles. I don't know when it's going to turn, and maybe it doesn't. Maybe this is the last time we'll ever see a bear market. Well, that means it's within about 10 minutes. Anyway, we'll keep a close eye on these for sure. We'll get some good entry points to see how we hold these things up together. But we'll see you all tomorrow.